Morning, everybody. It's the 31st of March. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, mate.
How you doing?
Yeah, all bad, all good. Thinking sort of like, are the markets bad or the markets good? Bad they are.
Don't know. Just frustrating, I'd say.
Yeah, I mean, great time to sort of like join. DAX is up at the 15,000 level, which we've been talking about. So, is that going to prove to be a big psychological level? It broke through yesterday, had a little fish about, and sort of came off. And then it's broke through this morning and done the same.
Okay, we'll come on to the chart shortly then. Just a quick roundup of the headlines today. So first up, we've got Deliveroo that starts trading in London today. The food delivery platform's turbulent IPO has been priced at £3.90 per share, which is at the bottom end of its original range. That will value the company at £7.6 billion compared to the €11.5 billion that we saw for Just Eat and the €27 billion that we saw for Germany's Delivery Hero. A few bits of criticism has been levelled at Deliveroo, particularly with regards to their work model. We've had a number of couriers complaining that they're making less than minimum wage on the app, which obviously isn't great. And also we've had some asset managers be quite vocal on the IPO, with Aviva, Legal & General and Standard Life Aberdeen say they'd stay away, citing concerns including its treatment of its riders. And we're expecting to see hundreds of them go on strike at the shares trading this morning. So that's not a particularly great start.
No.
One thing I've noticed about Deliveroo, I mean, it's not, it doesn't actually come to my area, but just sort of outside the area, in one of the McDonald's close by, they actually shut down the drive-throughs in the morning because they can't handle the amount of traffic on the deliveries, and they're just stacked up with Deliveroo riders. Forgetting about the guys who've actually gone to the effort of going to the restaurant and can't facilitate it. They're making them go inside, which of course isn't particularly COVID friendly either. So it's a bit mad.
That's not good, is it?
No. I mean, moving on from that, I'm sure we'll hear more about it in the coming days. But with regards to COVID vaccines, AstraZeneca are coming under a bit of criticism again. In Germany now, they've stopped giving the AstraZeneca vaccine to anybody less than 60 years old, after previously recommending it to specifically younger people. So that's not particularly great. Another fresh blow for Astra's vaccine. Again, it's about these blood clots that could be, or are a potential side effect. I think they've had 31 people had blood clots and 9 people have died from them. So,
It's a big number,
no one
isn't
wants
it?
to take any risk. I mean, obviously they've inoculated millions at this stage, but you don't want any risk from it, do you? Even if there's a 0.0001% chance of something happening to you, why do you want to take that risk? I'm not saying don't get the vaccine, absolutely not, but that is a concern.
Well, I think that there's a risk with everything, isn't there? Walking across the road in the morning and stuff like that.
Yeah.
I think you've got to sort of take the risk against what the upside is. Still a big question over whether the sort of like, COVID would have maybe impacted them people or not. You feel a bit rough for a couple of weeks or whatever. But some people have. Obviously, there is a risk of you dying from COVID, so you've got to weigh up them risk. What's the percentage of something happening to you? 0.0001.
I don't know. I made that up, but it was 31 people. They've said.
Yes, 31 just sounds like a lot, doesn't it? For the sort of something unusual like that to happen, it's sort of like that, sort of like a bit of a red flag. Canada did the same the day before, I think, as well with the vaccine. Anyone under 55, I think. They found it more in young women, I think, the issues, like 30-year-olds in Canada. So I don't know if it's the same in Germany. But yeah, it's
shares
not good.
don't really seem to be budging. The shares don't seem to be impacted by AstraZeneca by all this news. I wonder if that's because it's not for a profit, and obviously it's not impacting the revenues. only sort of maybe reputational.
Oh, yeah. But reputational damage is everything, isn't it? It can be.
Yeah, but I mean, obviously everyone's been rushed along to try and get this out, haven't they? So maybe there's that's a factor as well. We are expecting Joe Biden to speak today, and he will be unveiling his vision for a mass ramp up in US infrastructure spending. That'll be in Pittsburgh later today, talking about a $2 trillion package over 8 years, and that will be paid for over a 15-year period, with a bump up in corporate tax rates to 28% from 21%. Which is a pretty decent jump. But of course, this has got to be paid for. And there is still some fallout from this Archegos capital blow up. And the losses may total in the range between 5 to 10 billion, according to JP Morgan. The losses from the trades unwinding will be very material. And talking about Nomura having quite a big exposure, potentially $2 billion worth of losses. Press speculation of 3 to 4 at Credit Suisse. So clearly there is more to come from that, and that's not very good at all. And just shows you how fragile, I guess, these banks are in terms of exposure when these funds blow up, and it does happen, as we've seen time and time again over history.
Yeah.
Finally, we've got UK GDP that provided a welcome upside surprise this morning with an upward revision to the Q4 figure, coming in at 1.3 from 1%. So all looking pretty decent on that front. So let's jump into the charts then, Steve. Obviously, you mentioned the DAX reaching all-time highs yesterday. Is that the starting point today, or have you got something else you want to share with us?
Yeah, no, really starting with that, and we sort of see the reaction around that on the Audi chart. We saw the spike high yesterday, got up to 15,032.5. We had a overnight shift higher, got up to 21.5, and this morning 28.5. So got a nice little resistance level here formed at 15,000, around about 15,030. The reaction there, but we've also got a nice double, triple top building up. If we get a break of and a close below this 14,967, and then also below the 14,957, then we've got a triple top formation just on the Audi chart. So only short term.
It's pretty shallow, isn't it? Where does that take it? Down to the bottom, down to the cloud?
I would say it would be in that region somewhere.
Yeah.
To the bottom of the cloud, 14,880. Yeah, so not huge, but it would sort of like then offer
a bit of froth off the top, wouldn't it?
Yeah, exactly. Yeah, just a little bit of a reversal, but plenty of within an easy reach of punching through if it needs to later when the US come in. Dow's just off its all-time highs, a couple 100 points lower, but finding support around the Ichimoku cloud, and obviously we'll find additional support around about 32,875, so about 150 ticks below that. Nasdaq remains slightly pressured, more so than the others. That's trading within the hourly Ichimoku cloud, and doesn't look as rosy. We've got sort of like trend line resistance coming in above. Really, the sort of like the level really Nasdaq needs to get above is more up here. 13,000 really for Nasdaq. We're 100 points lower than that. So that's where I would sort of like look to be fading into any sort of like rallies. S&P, 3,981. Again, it's sort of like falling short of this magical 4,000 number. Well, I think it's magical anyway, I suppose, because I've mentioned it so much. Aussie 200, again, we've seen a similar sort of night session that we saw yesterday night, the big sell-off, and we're getting a sell-off today in line with the commodity sector, which we'll jump onto now. And start with gold, because that's had the decent move. We broke through the 1700 $100 level quite nicely and got down to 1677. Let's get the 4-hour chart up so to show where we're looking at. This was the swing low from 8th of March, and we stalled just in front of that and holding above it. So nice little bottoming formation on the short term. We're getting a bullish engulfing, bullish, wouldn't say a bullish outside candle because the low is slightly lower, but a bullish, well, it would be a bullish outside candle really if we ignore the tails. The body is completely outside the previous body. We've been up to 1689, just settled back down a bit, but there's potential for a small reversal here, but still a long way to go for it to shake off this negative channel that we're seeing. The corrective channel continues. For me, as we've talked about, the real level to watch from a daily perspective is between 1660 and 1675. A break there, and then we are motoring potentially down to the 1450 area, which for me is the long term set your longs and sit back and enjoy retirement.
Okay.
No, joking on that. Oil is potentially forming a head and shoulders formation. Need to get sort of like prices below $57 before we even contemplate challenging the neckline on here. But a break of this horizontal level would lead to some aggressive selling. In the last, well, yesterday was a bearish outside day, which was quite nice. Let's get rid of the formation for a second. Look at that nice reversal on the day. A high of 62.20, a low of 59.90, and we're trading around about mid $60 at the moment, 60.65. So I saw Saudi wants OPEC Plus to extend oil cuts into June. That's from sources. So desperately trying to keep these oil prices elevated. That's that's out news out this morning from Refinitiv.
That's another asset that needs a pullback, though, isn't it?
Huh?
It needs a bit of a correction after that massive move.
It does feel like it needs a bit of a correction, and we're still in this lovely bullish channel. So even a pullback towards $52 wouldn't change the overall trend.
No.
So yeah, it could do with a bit of a pullback.
We've got inventories today at 3:30. Just make people aware. Obviously, it's typical for a Wednesday. Expecting stockpiles to have risen by 1.9 million barrels in the previous week. So keep an eye out for that.
Yeah. I mean, that's been done on the comms side.
Lovely. Okay, let's move on to the FX side then. So another strong day from the US dollar yesterday. Let's just start off with the baskets. So this is the currency indices. As you can see, this blue line at the top is dollar index, which continues to trend higher, and everything else is falling in relation to that at the moment. So if we look at the dollar index on a standalone basis, then yesterday we had a really strong push to the upside, topping out at 93.35. Still looking for an upside move towards this 94.00 level. There may be an extension of that up to 94.48, 94.50. Bit of a turnaround today. So we have made new highs this morning, but we are reversing slightly, which I don't think is too much to be concerned about at the moment. Maybe just a bit of profit taking or repositioning there. But overall, still look I think pretty bullish for the US dollar, and I continue to be bullish of it in the short term. It's quite interesting what we were seeing on euro dollar today. Again, big push to the downside yesterday, and it's coming up just shy of this 38.2% fib level at 116.95. Again, made new lows today. Went down as low as 117.04, which is just in front of this 116.95 level. So maybe we'll see some buying come back in. The volume isn't particularly supportive. If we look down here, we can see that the volume's actually been sliding off on this move lower. which doesn't really suggest that the buyers are getting back involved just yet, but that may change throughout the day. We've got quite a bit of information, data out today on that front. If we look at cable, that continues to be trading below this broken channel. We saw a retest of it there on the 29th of March and just sort of flatlining at the moment. If we look at the US dollar versus the Japanese yen, that continues to move higher after this big break of trend, and is looking pretty strong in terms of upside targets there. And we'll be looking over to the left for some ideas of resistance, and we'll be approaching resistance around about 111.71 and 112.22. So decent bit of air in between those levels at the moment. So I think more upside to come. Euro sterling was quite interesting. It's broken below this big support level here. And if we go sort of further along, we can see where it's been previously. Is there any sort of fib levels to target around here? There often is, yeah. So we're bang on the 78.6% level, and seem to be doing a job of holding around here. We posted a decent looking hammer candle on the 29th. We did push lower yesterday, but we're sort of back a bit today on the
couple of decent spikes in volume there as well.
Yeah.
In the sort of retracement.
Certainly on that one.
Yeah.
So keep an eye on that. I mean, I think that's probably due a bit of a bounce at some point, but certainly the trend overall is pretty bearish. I think that's pretty much it for me. I mean, the only other thing I like still is this Aussie US dollar setup. So continuing to back the US dollar and thinking that the Aussie is due a bit of a pullback. We've seen a break of trend here. We've got a head and shoulders top formed. We broke out to the downside on the 23rd of March. We've seen a couple of retests, and yesterday that was a nice reversal candle. So got a bit of R out of that yesterday on the gun to the head trade. Still think there's potential for more downside down to sort of 72.35 on that one. So I might actually take a look at that again. But onto the gun to the head trades from yesterday, just to give you a quick overview. As I mentioned, we had the Aussie dollar trade, made 1.3R on that, or 43 ticks. And Steve, unfortunately, you were stopped on your Bitcoin idea. That pushed a bit higher. You obviously had a very tight stop on that, looking for a humdinger of an outcome. So overall, we made 0.3R yesterday, a little bit of a tick higher, nothing to get too excited about. Have you got anything for us today, Steve?
Well, you know what? I might actually. The thing we were talking about on the Remember yesterday is the impulsive 5-wave move higher, and then we normally see an ABC correction. And I said we may not see that. We may sort of see this this prices extend higher above the all-time highs, which would mean that we're still in the third wave. However, we did see a spike higher up to 60,000 stalled in front of that level. So we potentially are getting this three-wave correction. So based on that, potentially we're going to challenge the 50,000 level. So although yes, completely got it wrong yesterday, how about this for a bearish outside candle?
Yeah.
Volume picking up nicely, lovely. So before I miss out on this amazing opportunity, just where to put my stop, really, to have a sensible stop in there, Steve, for God's sake. Selling at 57,263. What about 58,263?
That's a nasty looking sell-off, that is, isn't it?
Yeah, it is. So top of this candle then, is it?
Oh.
Yeah, it is. It's the top of this candle. I'm going for it. Targeting a move to 51,263.2. To keep it nice, 6-to-1 risk reward. That's me, Bitcoin. Ta-da, see you later. Get out while you can, but get back in at 50,000 if you want.
Okay, I don't know what to do now. I like the DAX chart that you had and the potential for a triple top. I mean, obviously it's such a narrow range, and we're talking
it's
on
so
an hourly chart. So it's I don't know, it's not maybe the best opportunity, but let's just share my screen, see what I'm looking at. So Steve mentioned this really sort of tight range here that's forming, potentially a bit of a top. We've obviously had a bit of a poke above this 15,000 level. Clearly the trend is super bullish, so to back against it, maybe is a bit silly, but if we do break down from here, then we could quite easily see that move back down to sort of 14,900-ish. And due to there being a lack of other ideas that I fancy, I still like that idea of selling Aussie dollar, but that may have a bit of a correction today. So yeah, I'm going to do this. I'm going to sell it at 15,000 on the nose. I'm going to target a move down to 14,900. And I'm going to have a stop loss above the highs at 15,040. So that gives me 2.5 R if that plays out from here. Yeah, fading that move up. Let's see how that goes, shall we? What's going to move it? So we've already had German unemployment out. That came out around 15 minutes ago. Rates were expected to hold at 6%. I haven't seen any headlines following that. At 10 o'clock, we've got Eurozone CPI. Prices expected to rise 0.3% month on month. That could potentially have an impact on that DAX idea. At 1:15, we've got the US ADP employment report. 380,000 jobs expected to have been added from 117,000 in February, so expecting a big jump up. That's obviously a precursor to the non-farm payroll number, which is still due out on Friday, despite it being a holiday. At 2:45, we've got US Chicago PMI. At 3 o'clock, we've got US pending home sales. And as mentioned earlier, at 3:30, we've got the US crude inventories. And aside from that, we've also got Canadian GDP in and amongst all that as well. And at 9:20 p.m. tonight, around about that time, we're expected to hear Biden come on the wires with regards to his infrastructure speech. So plenty going on today, as well as obviously this Deliveroo IPO that we mentioned. So should be an interesting day.
Excellent.
We hope. Cool. Well, let's wrap it up there then, Steve. We'll be back tomorrow morning. And until then, trade safe, everyone.
Cheers.
Bye-bye.